Hello and welcome to another update video about gold. We talk about the gold futures here today. Just a quick reminder on the weekly chart from where we come from. Yeah, so we've talked in the previous videos about a wave 1 here back in 1980. So it's really the super long chart here. The wave 2 back in 99. The wave 3 here to the upside 2011. Wave 4 in 2015 and wave 5 still ongoing. And in the wave 5, that is currently where we are. That's where all the stuff is happening. And if I make that a bit larger, you can actually see the subwaves, how I see the market. This is not, guaranteed to be the correct wave count, but this is for me the most likely count. It is how I see it. There is another possibility that would be a much more bearish option. We've talked about that in the previous videos. I will announce that and talk about that in this video again. This as a wave 1, this as a wave 2, here a wave 3, topping out at around 2100 in 2020. Now we are, in my opinion, here in this fourth wave down, and there will be one more fifth wave to the upside, another rally. That is how I currently see it. However, I will lose faith in this count should we drop substantially below $1,600. Actually below 1608, sort of in that region, yeah, below the 50% Fibonacci retracement level. Why is this level so important? It is so important because as per this count, we are currently in a fourth wave before we enter another rally in a fifth wave. But as long as we are in the fourth wave, we should ideally not drop below the 50% Fibonacci retracement level. Yeah, it would be unusual. Normally, you would not see a wave 4 that is so deep, and that means that if we go below the 50% Fibonacci retracement level, and we are at the moment maxing out basically what it can do, if we drop below this level, I do have to assume we are in a different wave count. Well, not really different, but I would have to assume that the wave 4 actually doesn't end down here, but that it actually ended already here, and that this wave 5, which is up here, already ended here. What does that mean? Well, that means that we had the end of a cycle here back in March, yeah, or end of February, March, and this means that if 5 waves are complete, we completed this entire cycle, which means welcome to a massive correction, okay? And that could take us down. I have to draw the fibs differently, yeah, but then we talk about a correction that could take us down sort of into the region $1,100, 866, maybe even 531, even though that would be quite extreme. But that is what will happen, in my opinion, should we drop below the $1,600 level. Now, I'm not worried, if we have a daily, if within an intraday chart, if we go below 1600 and recover quickly. But if we really go below that level, then it basically good night. But it is very, very interesting, therefore, what's currently happening here in the market. In the previous video, we talked about the market has another chance to reverse in this yellow area. We have now come into my target area that I defined already back in February, January, 3 times, and every time we attempted a reversal. So the market attempted a reversal here, clearly failed. It attempted a reversal here, clearly failed. It is now attempting another reversal, yeah, so we see a little bit of upside, and this could now help us out of this. But I am not really convinced in a substantial breakout until we move above the wave B high here at 1,740 US dollars. A break out of this corrective channel will already be an indication, but you can see how relevant this channel is. We've got 1 touch point, 2 touch points, 3, 4 touch points. It's a highly relevant channel, a resistance line, a descending trend line. And if I now zoom in, we're on the 4-hour chart. We could say that, since this recent high at 1823, we came down in an ABC pattern. That's my view. And in this wave A, yeah, we came down to 1623, bottomed locally. We moved up only in 3 waves, in my opinion, a wave B, and we're now coming down in the C wave. Now this C wave could be finished. We can count 5 waves here. We see quite a strong reaction now to the upside. And to be honest, it would be good for the market to finish it. It was a double bottom here on the 21st basically yesterday, and we are starting to move up quite strongly. It is at the moment too soon to really say that this is already a substantial breakout. The first indication that this is something that to be taken more seriously would be a move above this. Let's say this high at 1692. That would be a first strong indication that we are pushing higher. And the next relevant level will be, still want to change the fibs. Next relevant level will be the 1740 level. These are so there's basically three key levels. The first level at 1692. Then we've got the descending trend line and then 1739. So this could already be a first wave to the upside, but I don't have enough structure here in the chart to really confirm this. We do have enough waves to call it an impulse, yeah. So we could say this was, we have a wave 1, 2 here, a 3, 4, and now a 5 here, or 1, 2, 3, 4, very small 4, and the fifth wave now pushing higher. This could be an impulse. What will be important in any retracement now, we need to hold the 78.6% Fibonacci retracement level. Now, I don't know when this will stop now, but from the current point of view, if we drop below 1630, which is the 78.6% Fib level, I think we're going to see new lows, because the 78.6% Fib level is always a highly relevant level. If I count this as a, let's say, a 5-wave move up and a wave 1 then, yeah, which would be an impulse. And the wave 2 down should not come below the 78.6% Fib level to basically stay in a highly probable or in a likely breakout pattern, yeah. So we would expect here a wave 1, 2, then a 3, 4, 5. So we want to see 5 waves, in such a market like this, where we had already quite a few fakeouts. We had only 3 waves in the end up here. The market failed at 3 waves. We had 3 waves here. The market failed at 3 waves. So you want to have the 5 waves, decent 5 waves complete, and then also get the correction in place in a 3-wave structure, making a higher low and reversing back to the upside. Then you can say with a higher probability that a low was already in. At the moment, we simply can't say it yet. Yes, surely the momentum has shifted at the moment, but it could just be another, let's say, bearish rally. But the potential is there. I mean, this is in the end the area where the market needs to turn around. We see good bullish volume. I mean, look at the volume here. This is the best green, let's say, bar on the volume chart since March 2022, sorry, which is good. I mean, on the 4-hour chart, let's go to the daily chart maybe. On the daily chart, we are currently seeing a bullish divergence on the MACD. Yeah, you're making higher lows here, which is good. We see a bullish divergence on the RSI, which is also a good sign. Yeah, so this is always a good indicator that things could be shifting. We see a reduction in negative momentum. So everything is currently, at least the indicators would support a rising price. But price action is always key. So what we want to see certain price levels taken out that I highlighted in this video. And yeah, that's my update about gold. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.